bien, bonjour.
Good afternoon, everyone. I'm very happy to welcome you for this third day of the FIC. I would like to thank the audience following the session live on the internet on the topic connected to cybersecurity, which is the cyber insurance, with this central topic that will be the core of our discussions. What balance for the cyber insurance market? So, cyber will become non-insurable. That's something said in last December by Mario Grico, the managing director of Zurich Insurance. According to him, attacks against hospitals, ministries, companies, local and regional authorities like the city of Lille recently, or the transport and energy infrastructure can disrupt the functioning of the economy and human security much more than natural disasters. In his view, in the face of the multiplication of attacks, insurers are more and more reluctant to accept these risks and absorb the losses. Consequence of this tightening of the mesh of the net, the prices are increasing. Conditions to access this market have been tougher. SMEs are underinsured. While they are being attacked more and more. According to the latest report of MAE called Lucy, 1% of SMEs and ETIs or very small companies are covered, against 87% for large companies. But large companies are looking for other solutions than traditional insurance to be protected against financial conditions of cyber attacks, like the cyber insurance captive, or initiatives like MIRIS, which is a mutual insurance company created by industrial company like BACSF, Airbus, Veolia Environment, or Michelin, to cover each other mutually against the cyber risk. So I'll try to answer a few key questions. Is cyber risk, will cyber risk be insurable in the future? What can be covered by the insurer beyond the payment of ransom? What about prevention, and how can we improve the collective knowledge of insurers, companies, authorities on this risk? That's what we will discuss with our three guests. Olivier Lopez, you are a university professor of statistics and actuary at the Sorbonne University. Didier Bazocchi, you are former managing director of MMA, a well-known insurance company of the Covéa Group. And Luc Vignancourt, you are cyber underwriting manager at Beasley Insurance Company in France. Thank you for accepting our invitation to share with us your thoughts. First, very blunt question to open this roundtable. The threat is increasing, intensity is increasing. Is the cyber risk still insurable when you're an insurance company? Okay, I will start. Is it still insurable? I would be tempted to say, is it already insurable? I'll try to explain my view. In France, the risk is quite low. It's around 300 million euros of insurance premiums, which is not so high for insurance market because otherwise it's 1 billion. It's a small risk in France. But if we look at the American market, it's much greater. The figures from 2022 of the Treasury assessed $9 billion for the world market. It's now $13 to $15 billion. But the European market represented 4 out of 9 billion. So if we calculate versus the GDP, the American market of cyber insurance was 6 times the French market. So there's a great margin for progression, and we don't see why we wouldn't see such progression. Nevertheless, it's a difficult market for an insurance company. We're not going to talk about the fundamentals of insurance right now because everyone's going to fly away. But in a few words, why? The insurance market is the meeting of an offer and a demand, and both parties must find an interest in taking out an insurance in interesting financial conditions for both parties. Today, there are 3 topics. First, a legal topic, and we saw this during the a health crisis with the loss of operational and the necessity to cover losses for restaurants. There are in some places lack of precision, which makes the risk difficult to insure or subject to interpretation and discussion. It is increasing, but we can talk about it. In the cyber world, there's the notion of silent risk, which can make discussions difficult and create risks for companies and insurance companies. So there's a legal issue. And the second issue, which is central for insurance company or insurers, is that to insure a risk, you need to know the technological risk, and I'm not a specialist of that, but in terms of cyber insurance, is not exactly the case. Viruses change, there are a lot of things that are moving, and from the insurer's point of view, it's very obscure, and there's a fear from the insurer not to control that risk. Second condition is that this risk must be computable and finite. So we have data models, but not so many. It's a real issue. To calculate a premium, the insurance company needs to have a data model. And then the risk must be finite. And the question is it systemic or not? If it's systemic, it can be infinite or very huge. And this is frightening the insurance market. And the third economic reason, and it's the meeting of offer and demand. And Sebastian was saying it earlier, there are companies that do not perceive for SMEs the impact of this risk in civil responsibility, in terms of damage, or even bankruptcy. I knew a situation where a big company of the Nord of 1,500 employees was attacked and everything was blocked. It was not directly my customer, but they had no more accounting system, no more customer database, so they were totally paralyzed. And this risk can be, you can be protected from that. But since the hackers' technology is always evolving, the risk is not negligible and must be insured. And finally, I would quote a fourth thing we don't often mention, since it's a recent risk and that the market is getting organized, we don't have the retention basin we have with other risks. It's not like a bucket, because it's not exactly the right word right now. But insurance is the law of great numbers. To accept peak risks and some cyber insurance risks go up to 40 million euros. So to accept peak risk, you need to have a retention basin. And since it's a growing market and a new market, we don't have that. Maybe it exists in the US, but in France, it doesn't exist at insurers. And even though it is an emerging market, French insurers are still quite reluctant. Okay, we'll talk with Olivier Lopez how we model the risk, because the insurer works with data. If you don't have data and knowledge of risk, they won't accept to navigate without any compass. Luc, same question, direct response. According to you, is cyber risk or uninsurable right now or in the future? Well, cyber risk is totally insurable in my view. And I'm going to play the dinosaur. The first cyber policies were from the 90s in France, but it didn't really evolve over the decade of 2000. We were able to start a new market from 2010 in France, and to be able to insure a risk, you need two things. An insured company that has to identify its issue, and an insurer capable of funding the claims. And for them, they have to receive more premiums than claims. So that's why many people discussed over the last years, because the cyber insurance market is short. Since 2020's And there's a total imbalance in 2020. It's the Lucy survey. There was a volume of 130 million of premiums, and there were 217 million of damage that was paid by insurers. So when there's such an imbalance, we can ask ourselves many questions. And so we had to redress the situation. And there's no other solution than to increase the price or the premiums or reduce the guarantees. Well, actually, there's a third way. We needed, of course, to increase the premiums. We don't talk about a lot about the increase of premiums. We don't talk about the decrease of premiums, because in 2010 the average premium price was 1% of the limit. If you purchased 1 million limit, you were paying 10,000 euros of premium. In 2018, it was 0.4%. So the prices decreased by twofold factor in 5 years. So when you lose 217 minus 100, you have to increase your premiums. Some insurers increase more than 40%. Some increase by 3-digit percent, whereas the average was some 17-40%. It was quite brutal, not because the insurers wanted to be richer, it's just they want to absorb the losses. But we see that the increasing of prices is not, premium is not enough. Now we have to decrease the claims and damages. There are different philosophies. Some insurers will decrease risk, put amounts that are not covered, or exclude certain things. Other insurers will work differently to decrease the number of claims. Instead of limiting the guarantees, they will help their insured companies to improve the quality of their protection, to decrease exposure to risk for this entire ecosystem, which is the insured and insurer ecosystem. Okay, let's try to be educational on what we can find in the cyber insurance contract, because here we don't have only specialists of insurance. It's important to understand what we find, what covers and what does not cover the cyber insurance contract. What the contract foresees in terms of services, because the insurer is not just here to pay the damage or ransom, and they don't all do that. But what do we find in a cyber insurance contract today? Well, to know what you find in a cyber insurance contract, you need to define cyber insurance. And what you need to understand is that it's the insurer's first profession is to pay for claims and damage. That's the core business. And so cyber insurer is reimbursing the financial impact of a company when it has been attacked via its IT system. So when a company is being attacked, and we will have to see the financial impact it has suffered, because a problem with the system means a problem of availability, integrity, or confidentiality of data. That's operational impact, and we have to translate this into financial impact. What will do the cyber insurance? It will reimburse three parts. All the expenditure that the company will pay to remedy the crisis, stop the attack, and the repair is the reimbursement of all the expenditure. In this respect, the reimbursement of the gross margin of turnover. When you have an IT attack, it will slow down the economic activity or stop it completely. So the insurer will reimburse for the loss of turnover. That's the second part of the guarantee. And the third is when the company suffers an attack, there's an issue about the confidentiality of data. Some data will no longer be confidential, and potentially third parties will be impacted, and the insurance company will also reimburse the third-party claims and the defense premiums. So the three pillars I've just mentioned. We talk about cyber insurance. It means that it's an insurance which is Well, for the dinosaurs of like me of insurance, it's a nominated risk, and what do we cover? The attack against the IT system. So to activate a cyber contract, the company has to have been attacked on the information systems, which will in turn have an impact into the accounting figures of the company. So it's always this scope, which is important to understand. We'll talk about the loss of operation without damage. So cyber is loss of operation without damage. It's not just any type of loss of operations. It's due to a specific problem, which is the attack against IT system. And the scope is limited to this event. Yes, indeed. Didier Bazocchi? Yes, it was very clear what Mr. Vignacourt said. I wanted to give you a few concrete elements. This is a market contract. He didn't mention it, but there are very few big cyber insurers. My neighbor is there, but on the global market, we have just a few players. So I took a typical contract, and it's interesting to look at what's inside the contract to illustrate concretely. And I will make an introduction. On industrial risks, an insurer is attached to preventing risks, what we call the risk visit. The risk visit in cyber domain, it's different, but the question of prevention is absolutely essential. It's not reasonable to take a risk without making sure that the company has enough precautions to prevent a hacker to enter through the main door during a weekend. So there's this first topic, but it's an important path of protection for a company, because the company says we can insure, but first you have to take precautions, and we can help you with the diagnosis from the insurers. In terms of incidents on the contract, I took as an example, there are things like this: urgent action. There's a hotline 24/7 to have access to advisor, which enables to the CISO to know how to start, where to start. It's very important because we might talk about ransomware. French law has accepted that companies pay a ransom. There was a very heated debate on this topic. And the insurers says some insurers says we will remove this ransom payment from our contract. Indeed, the debate was if we pay ransom, people won't be careful, etc. But in the case I was mentioning earlier, when a company is in a situation of total blockade, there are some number of cases where they can't do anything else. But we have introduced a provision in the French legislation, which is quite wise. The fact that the insurer may pay the ransom, if it's foreseen in the contract, is conditioned upon a declaration to the authorities in the next 72 hours, which is close to other regulations. So it doesn't mean every ransom will be paid. It depends on any case, and the legal regulatory framework can be useful. So urgent action to advise an entrepreneur to do this declaration if appropriate, and to have access to IT experts and communications means, because often there's a problem of notoriety and reputation. Of course, you will have to use lawyers, people for restored data, monitoring and surveillance. Then the second part is the damage suffered by the insured party, which you have mentioned, but it can go up to the sanctions of by the regulators, and civil liability, something that companies forget sometimes, because due to the fact of a subcontractor or an employee or an error, the company might be liable or held liable for the consequences of the aggression with respect to its own customers, because the virus can be spread through an exchange of data with a customer, and if the customer is attacked and the cause is the company, this is a cause for civil liability. And so This is the type of situation which justifies that it's not just about prevention service and the support and data restoration, but it's a more comprehensive topic where legal aspects are important in terms of responsibility. And this is where insurers have a role to play to the fabric of SMEs and ETIs, because as we said in the introduction, the large groups are already covered by insurance contracts. Okay, let's talk about ransomware with Luc, well, in a few minutes. But Didier Bazocchi, if we summarize the cyber insurance market in France, it's often held by international insurers, maybe more Anglo-Saxon. So you're the former managing director of MMA. We won't target MMA specifically, but why do we have so few actors that are typically French, which have developed an interest, specific interest on cyber insurance? Well, I'm no longer able to speak in the name of MMA, but it's a general reasoning. MMA is a general insurer. 60% of its turnover is made on company and pro markets, and it's one of the major actors of company coverage. If the choice at the time was not to go significantly on that market, it's because it was and it is still a very small market for the French market. When an international player rolls out know-how, they do that at a global level, and the international experience is essential to understand that risk and support it. When you're a French player and you have a lot of things to do on the French market regarding corporate claims, we don't have the immediate reaction of trying to get a foothold on this niche market, which we don't control so much and which is global. That's the main reason. And as any company, the company chooses its offer strategy, and it was not part of MMA's offer strategy. Of course, the MMA agents support companies and offer responses and when they cover other corporate risks, and the cyber issue can be discussed with the company leaders, and MMA insurers, like other insurers, will search for one of the 3-4 global insurers to find the right solution, not the one I mentioned earlier. Luc, regarding the payment of ransoms, we mentioned the Logby law, which has validated a certain number of rules with the report within 72 hours. Before it was 24, 48 hours, and 72 hours. There was a debate regarding the right delay, the right time to report. But beyond that, we kept the principle of the payment of ransom. There was a threat that it would be forbidden, but it was confirmed by the law that it would be possible. Are we right to reduce the debate of cyber insurance to the payment or not of ransoms? Is it not too restrictive? And what is your policy? Well, it is totally restrictive, and the best example is that there was a debate regarding the payment of ransoms with the High Committee of Legal Aspects that emitted an opinion. Then the Treasury talked, then ANSI added its contribution by saying, well, it was not good. These bad insurers are financing the criminals. So we heard a lot of things. And all that to reach an act which is called the Lock Me Act, which does not mention ransom. So it does not specify if you are allowed to pay a ransom or not. It's not mentioned in the act. The second thing with respect to the payment of ransoms, and you're asking us what is the Beazley's policy. It's not an end per se to pay a ransom. We have the chance of having a beautiful cyber experience. The reimbursement of ransoms, because we did reimburse a few, it's really nothing with respect to the expenses and reimbursement of expenses that companies have suffered with respect to the loss of operations. So saying that cyber insurance is just about ransom payments is too restrictive. In cyber insurance, there's a real support to help the company survive. You talked about all the expenditure, all the turnover. It can be third-party claims, which can be very high in some cases. So the LOCME Act did not reduce that to ransom. It was even broader. If we look at LOCME law or act, if a company suffers an attack against the IT system, to be indemnified, it has to report the attack within the 72 hours of discovery of the attack. So it means that, one, we're no longer talking about cyber insurance. All insurance policies, whatever they are, if they are activated by an attack against the IT system, there will have to be a formal report to the authorities. A simple example, an IT attack in an industrial site, which will work on the heat controllers or chemical process controllers, and this triggers fire, for the company to be reimbursed by the fire damage insurance. It will have to report a formal complaint. It's broader than cyber insurance. And then you're told you have to report within 72 hours, but after what event? If you have a CAC 40 group, it will have CERT, and that will detect 200 attacks per day. I don't know if the state systems are able to accept more than 200 reports per day. So it's a public act, and so everyone is obliged to implement it. As an insurance company, we will apply it, and before reimbursing for a claim, we'll check that they will have reported it officially within 72 hours. Then regarding this act, some people said it's for authorities to better monitor attacks, to identify criminals more faster, because we'll collect more information. Well, if the objective is to collect information and to fight against criminals, why did we attach this obligation of report to the implementation of an insurance contract? Because to indemnify, you have to report it. But what is the percentage of companies that is insured? We're talking about less than 5%, even less than 0.1% in some cases. So this act is valid for just a few percent of French companies. So if a company is insured, they will have to lodge a formal report, and otherwise they will seek self-insurance. We don't know if the captive reimburses. Well, indeed, the Act says that indemnification requires the formal report to the authorities within the 72 hours after being informed of the attack. Yes, a comment regarding the issue of ransom. Insurances are also rational entities, and you shouldn't think that viable policy would be to systematize the reimbursement of a ransom by an insurance company. It's suicidal, because otherwise you put a target on all your insurers' head, and therefore on the insurers that has to pay the claims. There's a recent attack that tried to exploit the idea that, or giving a method of operation to be reimbursed by the insurance company. So if we start like that as an insurance company, it's not viable. I totally agree with what you said, but it's not in a contract. We saw it in the debate with the caterers of the loss of operation without damage, how a lack of precision on a contractual clause leads to disputes in the media and the legal sphere. So the insurance company must be very precise in this respect. So it is likely to reimburse or not. And if there's a big legal issue afterwards, it won't necessarily be in their advantage. In this respect, the act has a lot of inconvenience, indeed, but that has the merit of if there's no formal report, there's no reimbursement. There can be borderline cases if it's the temperature sensor that led to the fire, but most of the cases it's not that. It's an attack on the information system, and so it's much clearer than that. It blocks the accounting system, the customer database, and so it's directly an IT topic, and we are quite comfortable to identify it. The problem is that this formal report for the damage and civil liability contract or cyber contract is that the entrepreneur does not have the reaction of lodging a formal report to the official authorities, and hence the importance of the insurer in that case to give a comprehensive supporting service when they learn that the insured party has been victim of the attack.
Yes, the whole teams here, cyber services, or even the sinister, the claim services have. So we'll give as first information to say you have to fulfill a complaint. We recommend to do it after. Some people do it, other don't. Some companies have some different tariffs, rates. But I would like to come back on the notion of modelization. We said it before. The risk has to be calculated. We need to rely on knowledge of the risk in order to develop more skills, more competencies, which is not the case today for cybersecurity. Why is modelization so difficult today, and how to overcome this difficulty in order to have fixed rates for insurances? So first of all, we need to ask ourselves, why do we want to modelize? When you have an insurance activity, you have to anticipate. When you purchase an insurance contract, you have to evaluate a risk. And so we are foreseeing this risk. So we need to manage we will need to manage the risk once the risk has been taken. And this is all about anticipation. Anticipation means trying to see the future, and even if it will be difficult as an individual level, but the insurance will have to manage a collective risk. And so the capacity to estimate what will be the risk, how many victims there will be next year, and the gravity also of the problems. We have said that the cyber risk is an emerging risk. And it is particularly disturbing because, for instance, for droughts, today it's an emerging risk. Why? Not because we just figured out that there are droughts, no, but because now we have cracks in houses, and that's a new phenomenon. But the physical side of the risk, we know it. But as far as cybersecurity is concerned, we were talking about the first cybersecurity products. Cybersecurity is a very old problem, as old as the IT, but it's a relatively recent risk with a very volatile situation that is changing every day. And we have, on the other side, an emerging market and two main emerging markets. You have, on the one side, an emerging market where prices will be driven by competitors. So the right rate would be the neighbor rate minus €1. And in this situation, it's a race until the accident will happen, and then you will find yourself in a catastrophic situation. Second case, when one will be too cautious because we don't know the risk, so we apply a crazy margin, discouraging many actors, And today we don't have a critical mass in the wallets in order to absorb the risks. So the insurance contracts need to be attractive to attract people. But one of the solutions is to try and understand the risk and trying to use this knowledge, this understanding in order to adapt the rates and also for the insurance to set up emergency processes to ensure good care. This is necessary, but it is still difficult because currently we don't have a lot of information, we don't have a lot of data. We don't have clear ideas in the way we have to process all this data in order to bring the right answers. And also the risk is changing. We often hear that you just need to focus on the market to understand it. But no, because here things are changing so fast, so you will need to adapt very, very fastly. Yes, I totally agree on what you said. And I would like to give a simple formula. So the price for the insurance is the pure rate. That's what we are paying. And the first thing we learn is that you need a mathematical formula with two variables, two independent variables. And if you are able to modelize this equation, then it will work. But if you can't do it, then it won't work. And moreover, when you have a systemic risk, there is a relation between the frequency and the intensity. So this is so difficult, and this is the reason why it is so difficult today, because we can't apply the fundamentals of the profession. But to continue to speak about modelization, Bercy has work within the framework of a working group, and you were part of this working group, right? Yes, there were insurers, and they made some proposals. The first, as you said, cyber is a really recent system. We have integrated in the insurance code the cyber insurance, so this is an evolution. And in the proposals, there was also the setting up of an observatory of cybersecurity. But what can we expect from this center? Will it be a center to share data? And altogether, we could learn to better understand the cyber threats? Or will it be useful for the insurers? I can't answer this question. Of course, we need data in order to modelize, in order to understand. This means that we need statistics, and it is not an easy task. We need to decide to collect data and also to know which data we need to collect. And even before that, knowing what we will use this data for. So it's not only observing the trends. We need to have a center that will help us to prevent the risks, and for economical stakeholders, they need to exploit this information in order to create a viable system. What would be very interesting today, if I can make the parallel with other risks, if you take all the risks in life, the insurer has data on demographics in order to have references on mortality. And for cybersecurity, we don't have all this information allowing us to understand better the risks, because a wallet will never follow the traditional data. So what do we need for these centers, observatory centers? These centers will allow us to have a benchmark, but more than that, it will feed our knowledge, our understanding of the risks and also what will of the costs. And also we will need to follow the threats, not only see what happens. When we look at the study of AMRAI, the recent study of AMRAI, we can see the positive vision on the last year on loss ratio coming back to normal levels. But we have seen also a rise in the rates, insurance rates. So we are living the reaction to what has happened. And so this observatory center should allow us to better understand the evolution of cyber systems and also to measure how we can prevent and also how we can evaluate the costs. Luc, do you also plan to collect data? But I have to admit that if all stakeholders are collecting data, we are talking about sensitive data, no? Yeah, the Observatory of Cybersecurity, cyber risk, but we could also try to understand cyber risk. Maybe we are not the best place to understand. We will need to work with companies, but we don't have data on that. So we are saying to the insurers that it would be great to share your data. But then we are asking too much questions. But if we want to have information, we need to ask questions, isn't it? I have some doubts. Also on the fact that when an insurer, what would be interesting is to collect data from claims analysis. But most of the time, what are the insurers doing? They will just indemnify a claim, a sinister. And service providers will go and see contractors, will go and see the clients to indemnify them. So we will try to collect data with an observatory. We are at least sharing our data with our clients. So we make an analysis of the claims, the sinisters in our wallets, and we are trying to find a common ground. And we will share this common ground with our clients because these are the insurance criteria. I will try to go not too much into detail, but when we see that companies who have access, remote access to their IT systems, this is one of the preferred system for hackers, and sometimes we can see that these companies don't have the security system set up in order to protect them, but will need to put an MFA in. We'll need to put that in place to avoid that. Saying to the companies, if you are not able to analyze the links you receive in your emails, then it's an open door for hackers. Yes, technical data are at the company's level. But we need here to understand there is data and data. Currently, we are lacking an understanding of the threats, and there is we need more statistics. And then we will need to ask questions on the conditions of sharing all this data. There is also another aspect I didn't mention. Currently, there is a segment on which we don't have any information, we are talking about territorial collectivities, and we are talking about tools to available in order to make a risk analysis. Let's talk about prevention. There is a high demand for prevention, for a limited insurance. We need to, when we go and see an insurance for a cyber protection contract, you need to overcome barriers, obstacles, you need to fulfill conditions, and it's not easy. So some people, before receiving an answer of yes or no, don't even try. So with all of this, the objective of an insurance is to support the client, to propose also a good deal depending on the environment, depending on the job. Yes, of course, absolutely. And this is the basics of insurance. For people having experience in insurance, this is how it works. Because you were saying that we could, for instance, propose a contract for a house made of wood and with a fireplace. So today, you have the evolution of the world. All companies are working in digital. They didn't have the choice. They had to do it, but nobody integrated the understanding that all this digital migration has created a risk, and this risk is there today, and companies are absolutely not ready to these risks. But as far as SMEs are concerned, they are lacking understanding and they need more prevention. We are using our experience because I was talking about the common criteria, the criteria that were used for cyber attacks. These criteria, if you don't fulfill them, you are not insurable, and also the insurance will tell you how to solve your problem, saying, okay, if you want us to support you, we will help you. We do have the resources, we do have the tools in order for you to solve your problem. So we will show you what you need to do to protect you. And so what are the conditions that are not respected, what are the criteria that are not fulfilled? Filtering emails, and also filtering attachments, remote access, protecting backups. So having a backup is great, but you need to protect your backup. So this is really important. Protecting the Active Directory, protecting the identity management, and also patch management, knowing the system to know where are the risks. This is the minimum criteria. And the EDR. Today, the problem is that many attacks are happening because of users. And there is a very, very fast spreading. So we need managed EDR or automated EDR, because when there is an attack, we need an emergency reaction and an immediate reaction. So on the market currently, there are very, very good products answering needs, and it's not costing a lot. So on the other side, we will talk about large companies. There are alternatives that are developed, for instance, captives of insurance. It's an insurance made of large groups in order to better manage the risks. It's a kind of alternative that is developing, and cybersecurity is part of that. France has recently created reinsurance captives because often these large companies have offices in Luxembourg because it's fiscally interesting to be there. And France is now trying to attract these companies. Can we expect from these companies to have a solution in cybersecurity? I think my colleague is better placed than I am. Yes, it was a pity to see all these French companies developing all these captives. The last one was a naval group creating its captive. We can see the interest for the large companies. It's to try and understand the risks without paying the insurance. French law didn't allow them to create provisions in order to face future risks. It was not fiscally interesting in France. It was more interesting in Luxembourg. So that's why they decided to set in Luxembourg. And so we would like to take back these companies in France, and so this system is totally regulated in France, and so it would be better to have all these companies back in France. But this is only for large companies. So for SMEs, they can't have this system because it's not interesting for them to have captives. It's very technical because they need an agreement with an insurance, and so this is a very, very technical part. Only large companies have the time and the skills to do that. Mr. Denioncourt is going to also to corroborate that, but it doesn't solve the question of many companies because large companies are already insured, are already protected. But on the contrary, the real problem today is for SMEs and ETIs. And it is not a tool made for small companies. So what about the insurance covering the risks, but with the prevention side? We'll need to try and support the company to improve its level of protection. And what about the insurer? I heard in a cyber campus CISO saying that the budget for insurance was too high, but the CISO needs money, needs the budget to protect the company, but also for the insurance. And the insurer is there to cover the risk when the accident is happening, because sometimes it can cost a lot, between 100,000 and 50,000 euros, so it's a lot. But it's important also to take some prevention measures, and it's the role of the insurer to set up prevention conditions. That's what we call the risk visit. So engineers will go and visit companies to try and identify the risks and to solve the problems. It's exactly the same in cybersecurity, but the risk is less clear, but still it's the same. So the answer for ETI and SMEs is risk prevention. Yes, of course, the insurance captive is not a solution. Captive is a company that decides to create its own insurance company with fiscal interests. What is interesting for companies It is more interesting if companies do that than insurers. And so some people have reflected on that about unfair competition. So we are not in competition because today captives are mainly only for large companies. So we are not talking about unfair competitions. But the biggest error that could be made is to consider that captive is a tool that will allow to have a fiscal advantage, a favorable tax system, and then we will need to be solid to be able to pay, to refund the claims. And I think this will help insurers in some spaces where they are not so comfortable. What about the notion of systemic risk? You were saying droughts and also the cracks, for instance, in the houses. We have seen many reports saying that one house, more than 50% of the houses have cracks. But today, droughts are covered because it's a natural catastrophe in France. And so the state has to indemnify people. Wouldn't it be possible to have the same for cybersecurity? I think we have exactly the same conditions for cybersecurity. Maybe we could have part of it being in private insurance, but also public authorities. Maybe just to indemnify if we are facing a large cybersecurity threats. There are 2 points. You have the systemic risk on one side and the public-private partnerships. The idea of partnerships, I don't have any opinion. The only thing I am wondering is that we have touched upon the cyber risk. Cyber risk has no border. So how to apply a partnership, public-private partnership on a risk that has no border? What about an Italian company who would have a claim or an accident in France? And moreover, it would be very difficult to localize also the attacks, the cyber attacks. So I think this is a big problem for public aid. It's the fact that in cybersecurity we don't have borders, or we could also to have a coverage only for French companies. I don't know if it's feasible. And also the systemic risks is also a problem, because if we would have too many accidents, then it won't be profitable for insurers. And that's why we are making a categorization of the different risks. Because we need insurers to be able to manage the risk. And I think this is fair. So insurers have to classify the risks and have to say how they are going to process the risks depending on their classification. Because the insurers have to show that they don't expose themselves too much to systemic risks, because the biggest fear is like NotPetya. The luck we had on NotPetya is that not many companies were insured in 2017, because in 2017 we have had 2 billion losses. And it was very, very difficult at the time. So we don't know about these systemic risks. Yes, and it is even in the report of the Direction du Trésor. If a state would massively attack the French market, it would be like a war. There is a jurisprudence on that. When the state decided to stop the French economy in 2020, the state has to accept the consequences for the companies. And at the time, it was very, very difficult. It was to the state to indemnify people and not insurances. So there is a risk that is more developed in the US, 6 times more. But I think we need to trust the market. French insurers have always been able to answer new demands, new requests in the society, for instance, terrorism, medical RC, also the harvest insurance, etc. So when new risks are emerging, there is always a kind of delay, latency, but there is always a solution. And in conclusion, I would like to say that on insurance markets, these markets are well regulated. There should always be a partnership between the clients, the companies, insurance companies, and the states. And up to now, this partnership was working very well. But will this system depend on the market or the systemic risks? I think that's where we need to focus on, and we need to understand that. First of all, we are talking about the market activities and the coverage of SMEs and ETIs. Those who are not covered today should be covered by the market. If there is a systemic risk, then we have other questions to answer.
Of course, I agree with what you said regarding the distance of a public-private regime on this topic. But regarding the CatNat regime, we're talking about the protection it offers, but we shouldn't forget its prevention aspect, which is an essential condition of the operation of this type of systems. Otherwise, you have systems that remove your responsibility. If you don't have the prevention strand or part, it cannot work. And so we mentioned this role several times of the insurers, but also the reinsurance captives, because they have a role of prevention. They develop a culture of risk within the companies that build them. And it's this development of prevention which is a key role that can be played by insurers. We've talked a lot about a fire before. When you look at the history of insurance, you tend to say that modern insurance was born after the great London fire, because the story is told by Anglo-Saxons most of the time. But insurers played a role in the reduction of the fire risk, because it enabled to roll out a certain number of standards that made so that in modern economies we don't have the same level of risk as the great London fire. Thank you to the three of you. We have the time for 1 or 2 questions from the audience, if there are questions. Yes, there's a question. We will give you a microphone. It will be easier. Please introduce yourself. Maxime Bourse. We're talking about risks. We see the development of scorecards. What do you think of this for cyber insurance? Well, you mean the ratings? I think that rating is of different types. There are different companies proposing different rating solutions. In my view, it's interesting, but it's mainly for insured companies because it enables them to benchmark themselves and to demonstrate their position versus their peers and can maybe incite them to make the general management aware of the potential vulnerability of the company. I know very large companies that have the goal of being the best rated in their activity sector because it's a very healthy objective. In terms of insurance, as an insurance company, the problem of rating is that it's a very external vision of the risk. And then each insurer, well, it's a competitive market, a commercial market, and then each insurer will have its own risk assessment, and we cannot align all insurers with the same analysis method. So we can draw a certain number of information for that, but it's not exhaustive, it's not sufficient, but it has some interest. We don't use it so much. We look at a few criteria we can find in the rating organizations. But for the time being, it does not correspond to our need as an insurance company. Maybe a comment, additional comment. Indeed, it gives a vision of the risk, but in my view, one of the difficulties is to understand how it translates into economic figures, because here we're talking about finance when we talk about insurance. And then you must imagine that an insurance contract is a dialogue between an insured and insured party and an insurer, which have to agree on a common standard and accept it. So there's a question regarding these ratings of their stability over time, their traceability, a certain degree of transparency for the insured party to be fully confident that it will not be detrimental to it if they use this rating. Same thing for the insurer. Thanks again to the three of you. A big round of applause, and thank you for following us, for those who were following us live. And the forum continues. Thank you. Bye-bye.